Ethereum is quietly building one of the most bullish setups we've seen this year, and while retail traders are rotating into microcaps, chasing quick gains, institutions are doubling down on ETH in a massive way. Today, I'm going to show you 3 major catalysts that have me bullish on Ethereum, even if we see a pullback first, and then deep dive into the technical analysis on both ETH USDT and the ETH BTC pair. By the end of this video, you'll understand exactly why smart money is accumulating ETH right now and how you can position yourself for the move that's coming. Now, before we dive in, if you're new here, welcome. If you're returning, welcome back. I'm Annie, and I've been trading the crypto market since 2016, when my grandfather got me into investing stocks, believe it or not. And this is Trade Travel Chill. Be sure to smash that like button and subscribe if you're not already subscribed, and let's dive in. So the first catalyst that has me bullish on ETH is the absolutely explosive on-chain activity. According to recent data from crypto analyst Case Abe, Ethereum's daily transactions have climbed to their highest levels in more than a year. We're talking about 1.7 million transactions per day. Now, this isn't just some random spike. This is surge in activity that suggests that ETH's fundamentals are strengthening, even if the price action hasn't fully caught up yet. What we're seeing here is more users engaging with the ETH network, with both active addresses and new addresses trending sharply upward. The EIP 1559 upgrade has continued to act as this quiet but incredibly powerful force in Ethereum's economics. It's permanently removing ETH from circulation over time, and right now the net ETH emissions remain near neutral. So what does that mean? It means that the ETH supply dynamics are becoming increasingly tight while demand is surging. Therefore, this combination of rising network usage and limited net supply is exactly the kind of setup that creates explosive price moves. This isn't hype-driven demand. This is real utility driving genuine, sustained demand for block space and the services built on the network. The on-chain activity is just the beginning. The second catalyst that has me bullish on ETH is something that's happening quietly behind the scenes, and it's pretty massive. Since the start of June, Ethereum treasury companies have purchased 1% of the coin in circulation. That's 1% of all Ethereum in just 2 months. And get this, that's double the pace of Bitcoin buying by corporate treasuries during the same period. We're witnessing the birth of the MicroStrategy model for Ethereum, and Standard Chartered's head of digital assets research, Jeff Kendrick, just dropped a bomb. He's predicting that ETH treasury companies are just getting started and could eventually hold 10% of all ETH in circulation. That's a 10x increase from current holdings. So let's put some names to this. BitMine is aiming to accumulate 5% of total ETH. That implies net buying of around 6 million ETH from current levels. And also SharpLink Gaming, which is backed by Consensus and Ethereum founder Joe Lubin, just added another 83,561 ETH last week. That's 264.5 million in a single week, bringing their reserves to over 522,000 ETH. But here's what makes this even more bullish than the Bitcoin treasury trend. These ETH treasury companies offer something that ETH ETFs simply cannot. They can earn staking rewards, it's around 3% annually, and they have access to DeFi leverage opportunities, whereas the US spot ETH ETFs are completely locked out of these yield-generating activities at this point in time. Standard Chartered is literally saying that these treasury stocks are a better investment than the ETH ETFs right now because their net asset value multiples have normalized to just above 1, making them very investable for anyone seeking ETH exposure with additional upside from staking and DeFi participation. In total, we now have 64 corporate entities holding 2.96 million ETH, and that's 2.45% of the entire supply, worth 10.81 billion, and that's just the beginning. Now, the third catalyst ties everything together beautifully, and it's all about understanding what's happening beneath the surface of these markets. Right now, the crypto market cap is holding a tight range. It's somewhere between about 3.6 to, at the time of filming this, it's about 3.75, let's say 3.8 trillion. And on the surface, this might look like consolidation, but when we have a look at this on the 4-hour chart, we did peak out here at 3.92 trillion. Then we had a sell-off, reclaimed the 200 EMA and held it as support. So the thing now here is to see if this total market cap is going to create a lower high for another move down, or is this the start of a new trend? The key now is for the total market cap to get back above to this previous high of 3.92 trillion in order for continuation. But what happens during this time is that we see retail traders start to speculate on low cap coins, and they do that because they think that that will give them a 20 to 50x, with the idea in mind that large caps won't make them enough of a gain. So while retail is getting distracted by shiny objects, smart money is quietly accumulating the fundamentally strongest assets. This is textbook market behavior that typically precedes major breakouts. So think about it. We have exploding on-chain activity. We have unprecedented institutional treasury accumulation at double the pace of Bitcoin. And we have retail traders starting to look elsewhere. This is the exact setup that creates those moves that catch everyone off guard. So right now, the institutions see Ethereum's fundamental value proposition is stronger than ever. The supply is tightening and the price hasn't caught up to the fundamentals yet. They're positioning before the crowd realizes what is happening. Now, speaking of positioning for major moves, if you want to trade ETH or any other cryptocurrency, you absolutely need a platform that can handle the volatility and give you the tools to capitalize on these opportunities. That's exactly why I've been using Pionex for my crypto trading. They've got an incredible offer running right now that I just had to share with you. This exclusive offer allows new users to get up to $1,299 in trading bonuses depending on your deposit and trading volume. So here's how the breakdown works. If you deposit just $100 and make one futures trade, you will get a $20 bonus. If you want to go bigger than that, you can scale that up with a $500 deposit plus one trade, and that will get you a $100 bonus. With a $1,000 deposit, you can get a $200 bonus after your first trade. A net deposit of $10,000 and futures trading volume of $10,000 gets you a $999 bonus. And then finally, a net deposit for the serious traders of $15,000 and a futures trading volume of $50,000 will get you the full $1,299 bonus. But here's the best part. Everyone who signs up for this gets the free VIP 1 trial for a month just for signing up. And that means reduced fees and priority customer support right where you need it. These are trading bonuses that help amplify your positions, perfect for this ETH setup I'm about to show you. The link is in the description down below. Make sure to use the code listed there when you sign up so that you can activate these bonuses. All right, now let's dive into the charts and let's see what the technicals are telling us about this setup. So having a look at EBTC first, you can see here, if you've been watching this channel for a while, you will know that I had two areas of interest in case we had a really deep pullback. The first area of interest gave us the double bottom. So I think we can count this one out now because it does look like we're out and we're moving away. And at the time of filming this, we are on the verge of creating a higher high from this last peak right here. So we have broken the significant daily level. This was a significant support and resistance level for quite some time. And if we can break convincingly and hold above it, I would expect that we would go for the next significant weekly level next. That's sitting at about 0.03625. This is a 4-hour chart. So when we zoom out and have a look on the daily time frame, you can see here that we definitely have this level 3 rise right here to go. And once we break convincingly out of this consolidation, I would expect that we would get into this higher area of interest as the level 3 rise next. So then when we have a look at EUSDT, it's a similar sort of pattern where we've got the first rise that definitely happened. We went into consolidation. We definitely had our rise too. And this essentially could end up just being a whole kind of consolidation as well. But when you then have a look at this, looks a little bit different on a smaller time frame, which we'll talk about in a second. But on a daily time frame, we're really just in the process of creating a range. And if ETH USD doesn't break its prior high up here, then it's possible we're just going to move up, create a second touch to a top of range, and then just, kind of continue doing something like this the rest of August, potentially then a final move and then a move out. Like that would be best case scenario for me. That's why I'm not giving up on my ideal entry range that you can see is marked there. Let me show it to you on the 4-hour time frame because it will make more sense. So on the 4-hour time frame, you can see that we had this rising bearish wedge. We got the perfect short out of that actually, broke down, and we touched right into my entry range but not as low as I wanted it to, but it did maintain a 200 EMA. So there's bullish and bearish things here. And that means I have to build a plan, which makes it a little bit difficult because I want to get a new ETH position. So currently I do have a coin margined trade from down here around the 2.1, 2.2, whatever it was on Pionex. And that has allowed me to long Ethereum using ETH as a margin. So I'm accumulating more ETH in that position. But I want to get a new position as well. When price came down here, I didn't get to do it because you're going to laugh, but it missed my entry by $3. It came down to 3,353 and my limit order was 3,350. So I missed it by $3. I was hoping we'd repeat the level to get it, and we didn't. We just took off. So that means I have to build a new plan. And I would say that this rising bearish wedge has now played out. It is possible that it comes into this vector zone here and rejects, but look, it's looking pretty bullish. It does look like it wants to break right through it, but I'll still keep an eye out on this area anyway. This has now played out, so it's no longer relevant. But like I said to you earlier, I would prefer to see ETH build a range for a bit longer. So I'm not really aping in here. But at the same time, if it breaks out, then it means I didn't get my position. So I need to have a plan for that, which I do have, and I will share that with you. But before I share the plan with you, I just want to also see what's happening in this zone and whether I can see buyers or sellers stepping in to change what's happening right now. So when I have a look at the heat maps, there's significant orders where the price is right now at the time of filming this. So there's a significant short traders wanting to short at 3,800. So that would be to maintain that lower high within my area of interest, but there's a chance they're going to get wrecked. So at the time of filming this, we're moving with momentum through that. It's 3,797. Now, something would have happened by the time this video comes out. I'm just showing you this in the moment for the purpose of education. But when we move up with such strong momentum like that, unless those orders are really significantly high, they either get pulled, there you go, they get pulled or filled at the last minute. You can pause this video, go back and watch what just happened there, because that was sitting at 11K and it's now down. See how it's dropping down to 567, and they're getting wrecked as the price is moving through. This means that the buyers are stronger than the sellers in this zone. So now we have to move up to where are the next significant orders, and they're up here. See 17K sitting at 4,000. So that might end up being our next area of resistance, which means that, yeah, I missed the entry on what I wanted to get, but I have a plan B. So we'll talk about that now. So like I said, I already have a coin futures position on Pionex on Ethereum. So I'm building Ethereum profits as the price rises. So I'm not too worried about that. That was in from the last drop at 2,100. I don't think ETH is going to go back to 2,100. I'm happy to hold that. But I want to add a second layer to accumulate more ETH without having to perfectly time every single dip. Like you just saw, I missed out by $3. That's so annoying. So I'm going to be opening a position using Gridbots on Pionex, and I'm going to use Ethereum as the margin. So let's just check out what's going on right now. These are my bots that are currently running. A lot of these are possible for you guys to copy. I'll tell you how to do that in a second. This is getting to the point that I'm going to start adding investment to these because, yeah, I'm happy with them. They're going well. But like I said, I missed out on the perfect ETH position. So I want to build a bot using Ethereum as my margin. And that means that I use the CoinM futures bot. Now, when I go back to my chart, whilst ETH is looking seriously bullish right now, and it may not happen, there is still a chance that over some time in August, because we're only at the beginning of August, there is a chance that if this holds the top of the range, or, you know, let's just say it hits the 4,000 short orders and they hold, and that's where we see a pullback, it is possible that sometime in the next month or whatever, that we do still come down to this $3,200 range. There were these other orders in the heat maps for longs at 3,050 and 2,090. I just want to check that out again, see if they're still there. No, so it looks like they seem to have given up. 3,100 is still there, but that seems to be about it at this point in time. And then the last thing I also want to just do is check where the highest level of liquidity is. Okay, so I've checked out my liquidity and I feel pretty confident of the range that I'm going to set. Now, I've already transferred 10 ETH in for this position, but I don't want to use the whole thing because, like I said, price is moving up at the time of me doing this, and I want to add to the investment if it comes back down sometime later in the month. So what I might do is just add in I'm just going to put in 3 ETH now. No, maybe I'll put in, no, actually, you know what? I'm going to put in 5 ETH because it's going to keep 2.5 of it as margin. But what I also want to do on this one, I want to set a trigger price. I don't want to enter this right now because it's at the top of the range. So we'll be buying a little bit too high. I'm going to trigger it here at, let's say, 3,590. And that means that this bot isn't going to start unless the price comes back down to 3,590. So what I will do is if it doesn't come back down far enough to trigger that entry, I will wait for the next lower high and I will just manually start it. So that will be my plan. So that's now created. And if you want to copy that, I will leave that in the description of this video. But before I do that, I need to address something critical about automated trading. Centennial Labs just exposed a massive scam where aged YouTube channels have stolen over $939,000 from people using malicious trading bots. These scammers were using established YouTube accounts, channels that look completely legitimate, to promote fake trading bot tutorials and smart contract code. So once people deposited the recommended minimum of 0.5 ETH, the hidden code in these contracts would drain their wallets. We're talking about victims losing anywhere from 4 ETH to almost 245 in a single transaction. And this is why I'm so passionate about education and why you should never, ever, ever give your private keys, your seed phrase, or send crypto or money to deploy someone else's smart contracts. The moment someone asks you to send or to deploy a contract they've created, that should be a massive red flag. And that's why I've just launched a completely free course that walks you through exactly how to set up these profitable grid bots yourself. You can literally complete this entire course in under 2 hours and have your own bots running before the end of the course. The course covers everything on how to identify the best coins for grid trading, optimal grid parameters for different market conditions, and risk management strategies that actually protect your capital. And here's the other thing. If you join this course within the next week, you'll also get an invite to my exclusive masterclass where I'll be showing you my secret Gridbot strategy for the rest of this cycle that's going to allow me to effortlessly accumulate into the end, but also heavily reduce my downside risk. So to access this course, you'll first need to join Pionex. Look for Pionex in the description of this video. You will see here the steps are listed very clearly for you. You just need to create and fund your account. Funding the account is your money to use on your own bots. And once you've done that, you can go to this link right here and get access to the course. Once you have your course access, you'll be emailed with the details of the masterclass that I'm going to be running. The spots are limited, so you definitely need to register for that one. Now, if you already know how to use Gridbots and you don't need the course and you just want to copy my exact settings for the ETH bot that I just set up, I'll put the link to that one also in the description of this video. Now, this is the exact same strategy that I'm using with my own crypto. So you know I'm not just throwing random ideas at you. But like I said on my last video, I really like Gridbot trading as a complement to my manual trading. Manual trading is going to help me to get the best risk to reward and to get those pivot lows in the bull market, like the 2,100 entry that I got on ETH when ETH last dipped. When you miss those dips, it doesn't mean you miss out altogether. You can just set up a grid bot like I did just now, and at least that's going to trade in the ranges for you until that next big dip comes. So for trading coin margin futures, make sure that you check out Femex and get those bonuses. For grid bot trading, check out Pionex. I also have some bonuses that are down in the description down below. Get your access to the course, get yourself to the masterclass, and copy the bot that I just created right here on this video. See you on the next one.